Welcome, everyone, to What's in Store with Carly and Chris, the show where we cover hot topics at the cross section of retail and real estate. I'm Carly Iacono, and I'm joined by my co host, Chris Ressa. Good morning, Chris.
Good morning.
Hope all is well. Yes?
Yeah. How about you?
Good, good. Glad to hear it. Yes, no complaints. We have an interesting show today that is a mix of, we're going to sprinkle in some psychology, a little cultural commentary, and of course, good data, all coming together to share where consumers are spending.
Right.
So let's do it. But before we start into, hard retail data and where consumers are spending, there's something a little different that you really wanted to cover today. This is all Chris for everyone listening. All Chris.
So I'm looking at this article, and it was like something like, "Are all bike stores gonna close?" And of course they're not. And so that clickbaited me in when I saw that article. And so I clicked the article, and they talk about this law called, in the article, Betteridge's Law, which is it was like he created it in the mid 2000s. This isn't like, something from, 3000 BC.
Yeah.
Yes,
Okay.
this is in Greek philosophy, right? So, but it basically states that if a news headline ends with a question mark that can be answered with yes or no, that typically you should assume the answer to the question is no. And so, like the article, are all bike stores closing their stores? When the author poses a question like that, the answer is typically, when it's a yes or no question like that, the answer is typically no in most headlines. And we read headlines all the time, and we speak about them on this show, and we talk about them with our friends and colleagues, and it could be about retail real estate, commercial real estate. It could be about anything, sports, anything. And I just thought it was an interesting perspective to think about as we're constantly going on social media, and this is posted on social media, and you're looking at headlines, if the headline ends in yes or no, this person's assumption and their law is that typically the answer is no. And I thought that was interesting. And especially for the consumer of this content is undoubtedly reading tons of headlines. They might be reading headlines of things that we talk about on this show. And so I found it interesting.
But you still read the article, right? So is the goal of the headline to convey a clear perspective, or is it to get you to read the article? So I would argue that whether the answer was yes or no, posing it as a question still made you read it.
For sure.
So that's our psychology of marketing piece for the morning.
Yes.
Thank you all for listening. Hope you learned something today on marketing strategy and headlines. Let's move on to holiday sales. So we just came out of, it's mid-January now. Holiday season is wrapped up. I think the punchline in holiday sales is they significantly outperformed in almost every category. Why do you think that is? Any surprises from what you were reading?
I thought we were going to have a strong holiday. We're up like 3% in store, 2.8, something like that. I thought we would be, based on the people I've connected with and talking to people, I thought that's where we were going to shake out. So I think I was a little less surprised on the numbers. I think that generally speaking, it sets us up for to have a strong, beginning of 2025. I think it's always hard to comp off of winning numbers, right? So there's that piece, and I don't mean that. I just mean that there's momentum going into the year on a positive, right? I think whatever your take is on the election, at a minimum, we've gotten past the result. We have, a good new end of year. We are going into an earnings season, which, should be decent. I just read this morning about all the financial sector and some of the success, and the market's seemingly up today. So it's just good momentum. I think my biggest takeaway going into the year, and and sets up good for the real estate perspective.
Yeah, I think what's interesting is this shift, right? Going into the holiday season, everything I was reading was retail executives were cautious. They were a little, pulled back on expectations, and the outperformance of the consumer was surprising, I think,
Yeah.
especially in the light of rising consumer debt, still persistent inflation. So your dollar goes less far. I thought there might be some pullback, and it was really noteworthy to me that even in the last 5 days of shopping, there was a huge uptick. So I think, going back to our psychology piece, that there was this almost fear of missing out at the end of the holiday season, right? It was a short, condensed holiday season. Maybe everyone started off a little more cautiously, and then at the end they were like, "Oh my gosh, it's almost here. We're running out of time. We want to maintain our lifestyle. We want to create this joy. We're going to spend, and we're going to blitz it out in the last 5 days of the season."
So, well, let's talk about, did you spend more or less than 23 for Christmas?
Definitely more.
Definitely more.
Mhm.
Interesting. We were pretty similar to 23 for
Okay.
us. Um,
I had the kids getting older. There's only a few more years. Let me do all the fun things that I've been thinking about. So it was more circumstantial with the kids than necessary like economic conditions. So I think
yeah,
that was the pressure that
got it.
made me spend more.
Got it. Got it. So your kids had a good Christmas.
They better have. That's all I'm gonna say. If they didn't, they're gonna have to move out. No, I'm just kidding. Yeah, it was a great Christmas. But I think it's right. So you have a few pieces here. You have the just the mental side of maintaining a lifestyle with all the excess savings from COVID that I think a lot of consumers are feeling. And to sustain that, they are taking on more debt because of inflation. And that seems to be continuing, not necessarily to highly concerning levels yet, right? We're watching that trend, but they're still willing to spend more, even though debt is increasing. And we're going to go through the show and talk about where they're spending and who outperformed. But I think the overall data that came in after holiday spending, like you said, was very positive for retail, that consumers are still out there in full force, willing to spend, and no sign of slowing down.
For
That's my
sure.
takeaway. I will, before we move on, I did want to make a distinction between online e-commerce and in-store sales. Both were up. I think the numbers for e-commerce were 6.7%, right? And online was like 2.3. Actually, the exact number, 2.9% in
For in
store
store.
for in-stores. So both were up, but we're seeing an even more significant growth in e-commerce. So it kind of makes sense. The retailers that have omni-channel platforms would be the ones that benefited the most. And I think that's what we saw in the numbers as well.
I would just say, I think the reason that there's higher growth is because they're starting from a lower basis. And so,
True.
right. So going from 1 to 2 is 100% versus going from, if you're at 1,000 and you have to go 100% of that and get
Such
to
a good point.
2,000. So that's why so I think it's pretty significant for the brick and mortar retailers to have the success they've had, especially after coming off of, a lot of the retailers who are doing well, some good quarters, so and good years. So coming out of
And that
COVID.
kind of slides us into what categories outperformed. And I think we both saw it was mass merchandisers who really came out ahead with the heavy emphasis on the discount stores, right? Like Costco, even the dollar stores, Dollar
I got one
Tree.
for you. What's a discount store?
Costco, Dollar Tree, Family Dollar, Target, I would say,
So what's the
Walmart.
so we go through this because we have to put this in leases. So discount, off price, outlet.
I know.
These are all, all words. To me, they mean distinct different things. So, and we blend them all in. If we're going to blend them all in, I like a different word,
Okay.
which is value retailer,
Ooh, okay. I like that.
right? So then it blends in, right? Like when you're going to TJ Maxx, you're getting a value. When you're going to Walmart, you're getting a value. But even though they both sell clothes, they're very different. And they're not different just because Walmart also sells more things. They're different in their buying. They're different in the types of products that are in the store, right? Walmart is, or even Costco, right? Costco has lower prices because of their membership-based model, right? Whereas Walmart is buying goods at such a volume that they can buy cheaper and pass on savings to the consumer. So you're getting, you know, lower than normal retail prices. Whereas some of the other categories, right? Like if you took, you know, Ollie's, right?
Hmm.
Ollie's sells a bunch of closeouts, which is, you know, they have things, or they sell some closeouts. They sell some other things as well, but they sell things where I don't know, you pick the product, a toaster, this model's no longer made anymore, but they were able to buy those because they're not making them anymore at such a discount and sell the toaster to the consumer at a much cheaper price than they might otherwise get a toaster for. And maybe them and Walmart sell toasters, but they're both that's not discount to me at Ollie's. That is closeout, which is very different than discount,
Okay.
which is what Walmart's doing. At least in that example, they might sell discounted things, but that's not discount. That's closeout. That's very different than discount. And TJ, who on their website now, or they talk about off-price buying and I think that's morphed, which is really just about when you're buying. But it used to be right about this whole concept that they were buying these how they were buying the product. Like you were getting, you know, a polo shirt, but maybe it was the one that was in the department store last year's polo shirt and not this year's polo shirt. So because they had that, it's still a great polo shirt. They were able to pass on a value, and that was kind of like an off-price model. To me, that's not discount.
So,
That's off price. Now, off price has changed dramatically, and a lot of the retailers talk about that on their website of what off price means, and it means a bunch of different things today. But I think, and leases even talk about the distinction between these.
that's tricky. So would you put like Macy's Backstage or like a retailer, a clothing retailer that has a different discount brand in the discount
So Macy's
category?
Backstage is an off price retailer.
Right.
They're not a discounter
Not a
to
discounter.
me. Yeah,
Okay.
and to I could tell you into some leases.
How about
They
value though? Would you call them at
They're
value?
all they're all providing
value.
value, right?
Okay.
And so like the Macy's Backstage, right? I think they might define themselves as a discounter in some way, shape. Someone might say that. I I come at it from like, what does the language say they are in, like in their use provision in a lease?
Right.
And typically the good retailers try to make the use clause as broad as possible but when they're and then when you get to things like an exclusive and they're protecting themselves, there will be things like, let's say it says you can't bring in another off-price retailer. There'll be a provision that says this is not to mean that discount stores such as XYZ can't come in, because they're making a distinction in the lease between off-price discount.
Okay, so for purposes of financial reporting of categories, right? If we're going through, let's say,
Yes.
one of our favorite
They're
dollar
all the
stores is
same.
like,
The government calls them discount. Sure.
but then we have mass merchandisers, which are different, right? I
Yep.
think we could argue they have a different product mix. So are you defining this by types of products sold, right? Like discount diapers, paper necessities, and a variety of products? Or are you talking about the way that the products are priced when you're
Me
putting
personally,
these?
on
Yes.
what? Mass merchants?
However we're defining, we can go value,
So
mass merchant.
on mass merchandisers, this is the groups such as Walmart and Target that sell just about every
Right.
retail product category.
Would you put Dollar General in the mass merchandiser category?
That's a good one. The dollar stores, they sell a plethora of different. They sell every category almost. So
Right.
probably, it's not the first one that comes to mind, but probably because they sell every category,
What
they're
about
just smaller.
what about Five Below?
I would not
Okay.
personally.
So you would not put them in mass merchandise. Would you put them in discount? I think we're going to need a chart here.
They are. I believe they are some level of discounter, but I would say Five Below to me is very specific. Their core category is the tween, which is, this young person that's somewhere between like, I don't know, 5 or 6 and 13 years old, which to me is a specialty retailer. That is not a mass merchant by any stretch of the imagination.
Interesting. So if you look at data sources like Retail Stat, which I know we both rely on and like their quality of data, there are categories, and these are all bunched together
I'm with you.
under
I'm with you.
mass merchandiser discounts. So you got to kind of group them. So if we're saying who outperformed, the answer is mass merchandisers, right?
Correct.
But who are we agreeing with in that? Target, Walmart, Costco, fine. Anybody else that you're agreeing with that concept of mass merchandisers outperforming by your definitions?
So I think my definition is one, it's as it relates to reporting of the data is not important at all. My definition. I meant just, I was being tongue in cheek as it related, because we always get into these discussions on in the lease. As it relates to the categories of retail, what appears to me that did really well based on the early signs of the numbers is the retailers who provided some sort of value to the consumer.
I think that's
and
the way to look at it.
had a large offering for them to choose from.
Right.
Those are what they're categorized at. I don't know. I don't know what every media source is categorizing them, what the government's categorizing. I don't know. But generally speaking, the retailers that provided a value to the consumer did well, because anybody who was feeling stretched, their wallet feeling stretched, thought they were getting a value there. And then there was a ton of articles around, where people of affluence were trading down to these to be able to buy more products. And so to me, just whoever was able to provide a value is in vogue right now.
And I think you absolutely nailed it, because that covers all the different consumer subsets that we just talked about, right?
Right.
The Five Below going for the tween, they're looking for value, they're going to Five Below instead of other retailers, right? The Targets, Walmarts, mass merchandisers, sure, those have always been about value and selection. And then for your other consumer subset, you have the Dollar General, the Dollar Tree, those outperformed on sales too. Not EBITDA, which is another conversation, but sales. And I think that very much plays into the consumer wanting value for goods, which is, I guess, the bottom line here.
That's the punchline, right? Whether it's cosmetics, whether it's sporting goods, people were looking for a value, and there was a lot of retailers who had the opportunity to provide a value for the consumer, and it led to a pretty strong fourth quarter.
I'll be interested as we start tuning into some of these earnings calls coming up in Q1, how that translated to the bottom line. Like, what did higher sales look like in terms of EBITDA? Because we still have inflation, we have high cost of goods sold, how much discounting was there? Like, the high sales is great, but I'm wondering if the story is quite as clear when we start looking at actual earnings. I hope so, but I'm a little more cautious, I think, than you are on that.
So there was a lot of things that were happening from the 2020 to 2023 era that were really big expense drivers that a lot of retailers were able to unwind themselves out of. And so that's opportunity too on the expense side, and opportunity for, EBITDA for those groups. And I think some of those are starting to unfold too, and will continue to show up in through these retailers.
The legacy expenses, you think, are still filtering through from previous years? Not legacy expenses,
I
but
meant
like
things
big
like
expenditures.
big, like, 9-figure transportation costs that have come down because, there's not boats stuck in the Pacific Ocean.
Right.
Things like this that were contributing to higher costs are
Okay.
finally all starting to unwind themselves.
To the positive,
Yes.
for the most part.
Yes.
Okay, so you think earnings are going to be
I didn't say that. I just said I said that I believe that the positive is that I think that we're getting to a place of normalization.
okay.
and some of the weird things that were costing are unwinding, and we're getting to a place where people, we talked about last time, the retailers have a visible, can see their future. And I think in a place of rising sales, a place where they have a real strategic plan and can see their future, and an unwinding of some of these weird, unnatural expenses that they had for this period of time, I think it's a good setup.
Okay. And then you throw in tariffs and a lot of other changes, but it's fine. It's fine.
That's
Yes.
that's a
There's
tough
still
one.
some wild cards here.
That's a tough setup. Obviously, tariffs are a tough setup. Clearly,
Yeah, there's still some wild cards. But bottom line for this segment is sales were up, they outperformed,
Yeah.
and that's a positive. All the other stuff remains to be seen.
Yeah.
Okay, so consumers are spending on goods. Value is the name of the game.
Values in vogue.
Values in vogue. I like that. Sorry. Values in vogue. Where are we on services? Because that's, really the next piece of this puzzle. If we're looking for value, what are we splurging on as a
Clearly,
consumer?
services. That's what
Yep.
they're splurging on. And I think a big part of we talk about fitness a lot, but I think the whole health and wellness category, which is expanded and has so many tentacles. We could talk about what defines a health and wellness retailer. Is that a gym? Is that a store that sells vitamins and supplements? What is a health and wellness? So the tentacles go far and wide of what a health and wellness brand is today.
Mm-hmm.
There's health and wellness brands that sell clothes and Fitbits and
Right.
things. So, but it's as if the health and wellness category looks like there's no end in sight for growth, and every day there's a new, whether it's a physical retailer, a consumer product, a service, there's a new thing coming online for health and wellness. And we've brought everything in from meditation studios to different types of gym memberships to fast food salad places. Health and wellness is exploding.
And I think that's partially culturally driven, right? We're prioritizing a healthier lifestyle, especially the younger generations.
Sure.
What's the one below millennial? Gen Z, right? Gen Z is really focused on healthy lifestyle, all the skincare, all the, gym memberships, like we said, all the different products, the smoothies, the energy drinks, things like that. And we're seeing these older legacy brands like Pepsi, like Dr. Pepper buy health. Now, again, define health, but health-focused brands across all the different product types, right? In an effort to appeal to those younger generations and kind of keep pace with the cultural shift of health as a priority instead of an afterthought.
Yeah, for sure. I don't know when it was, and it just dawned on me now. I believe Coca-Cola, like in the mid or early 2000s, bought like vitamin water.
Right.
And
yeah.
I think that was like the start
of
like
it.
they like, I got to give them credit. They saw like this coming.
Yeah.
And that was obviously a brand that was attacked for,
Not being that healthy in the end of the day.
And so they ended up, although there's this viral video of this woman who's like 100, who's being interviewed, and they're asking her, what's like the secret to your success? She's like, I do everything they tell me not to. I drink Coke every day.
Right.
I do all these. I eat ice cream like 4 times a day, and she's living,
2 bourbons,
whatever
night,
it is.
right?
Yeah, there's this viral video going around. Anyway, but yeah, that was like the start of it. But in general, we're clearly splurging on services. I haven't looked at the travel numbers, but my gut is travel's gonna, was a lot in the retailers in and around those travel spots. We talked about that one, European retailer that's opening up in airports and whatnot, because I think they saw the travel spend coming up. So I think travel's one, and people, even travel is like kind of made its way into health and wellness, because like I need to get away and vacation and all, right?
Yeah,
and
recenter.
Everything. Health and wellness is so big now as a buzzword that everybody is trying to attach themselves in one way, shape, or form to a health and wellness trend. So
So let's bring this to the bricks and mortar
Yeah,
element of health and wellness, gyms, because this has been a wild ride for gyms
it
since the
definitely has.
pandemic,
Yeah,
right? Like they're all going away. Everyone's working out from home, and then just kidding, they're not. And now
yeah.
it's some sort of hybrid. And the data coming out of gym memberships for 20, let's see, we only have 23 data. I don't think we have the latest 24 data yet, but the membership numbers to me are shockingly high. I know you think there's room to run, but I think we're at about 23.7% of the American population above the age of 6. So everyone in the US above the age of 6, 23.7% of that population has an active gym membership. I think that's wild. That's like right, 1 in 4 almost of Americans have gym memberships already. Now I know you think there's a lot more room to
I
grow
think
there,
that's
but
super low. I think it's super low. So the way I think
what?
about it is, and we were looking at this earlier. So if you take people under 18 and people over 65, that cohort, there's still over, let's call it over 200 million people in between those numbers in the United States. So to me, in such a booming trend, if 72 million, there's still 100 and, 25, 130 million people in their target that don't have a gym membership. And we're out there saying that exercise is extremely important to health and wellness, and health and wellness is so important, right? I it seems like that's a lot of opportunity, right? Those people might be the person who's like, I work out all the time. I just don't go to the gym because I run every day. Well, that's still an opportunity, right?
So they need a gym membership too.
I don't say they
They
need one.
should.
What I'm saying is that person's not. That's a
Right.
workout
It's a
person.
target.
That's definitely a good lead, right?
Right.
There's the person who just works out at their house. That's a good lead. They're working out. There's the person who needs to start working out who hasn't worked out. That's a good lead. I think in general, to me, that's a lot of. There's a lot of businesses out there that the target market doesn't have, the white space isn't that many people.
Right.
There's a lot of businesses where the white space is like much smaller than that. Now, it feels like we have a lot of gyms
It
to
does.
some people in some places. But to me, that's just about like who's good, who's not. And the types of gyms, and the business models, some of the business models don't need a lot of people to be successful. Some of the gym business models, right? So
So we have LA Fitness, which was able to refinance their huge bond debt last year, which was very good
and
news.
acquired export.
Right. And now is back into expansion mode
And they
through
bought a new
acquisition
brand, yeah.
and building new stores. So that's, a big thing to point to there. We have Planet Fitness, which is kind of ironed out some things with their franchisees, and they're moving forward in a much stronger position. We have Orange Theory that had a big merger
With
right?
self-esteem brands.
Self-esteem brands. So everything that we were kind of watching as weakness in the sector seems to be ironing itself out in a really beautiful way.
Well, yeah.
High-end brands are expanding as well. Lifetime, that's what I was trying to think of. Lifetime is doing very well, reporting good earnings. And then you have the value ones that are kind of growing as well.
Yeah.
So we're going off the script here a bit, but where do you see the risk in the gym space? What do you think the challenge is coming up? Because everything is swimming along right now.
Where I'm not, I think the biggest challenge in this space, generally speaking, is the same challenge that happens in every hot area. Is the competition grows really fast. Whenever there's extreme demand and a lot of dollars chasing something, competition grows pretty quickly. What you saw in competition over the last, call it decade, is this move to, instead of competing on a big box level, right? You had Planet on the Planet Fitnesses and some of the brands like them in the box space on the value end. And then you had medium tier and some high end brands of Lifetime and Equinox. But what really was the growth in that was all these specialties that decided that we are a standalone business and we can service our consumer as a standalone business as a much smaller footprint, or prototype store footprint could be across the country. And we have things like, rowing clubs and stretch labs and bar studios. And now we have all these different types of things, which just creates a lot of competition.
Right.
And what's interesting is, when you ask some, like what was interesting to me is like where the consumer dollar is going. Like there's a lot of people out there who, you mentioned that you don't think there's a lot of room for growth. Here's why. There's a lot of people who have multiple gym memberships. They have their Class Fitness gym, they have a box gym, they have a Peloton subscription. They have a lot of different things that they're doing. And then there's people who they're friends with and don't even have one. I think that's a great opportunity for gyms.
Well, I think that's why services like ClassPass were created, right? Because there's so many different specialized, almost fragmented
Yeah.
gym concepts right now. Like you just said, like maybe I love to do bar classes and rowing, and I like to, do running classes in a group, like
Yeah.
all of that. But these are three different things. So maybe I need three memberships and
Yeah.
that gets pricey. So there's a way, services that will allow you to have a certain number of classes in
Yep.
each one, which is kind of making it a bit more cohesive. But that could be the risk, right? The highly specialized gyms that need a more focused target market. I'm not saying they're bad, but I think
That could be a risk. I'm not
that's a
saying that
challenge.
the risk
Yeah.
to me in general for this space, personally, in my opinion, is just you better be good, because I think the
Right.
competition's ferocious right now. It's a very
Interesting.
health and wellness is a very competitive space right now. Whether and I don't care if you're on the technology side with some new gear, whether you're on the food and nutrition side, whether you're on the exercise side, it is everyone's trying to get into this space because of the trends.
Right.
And that makes it the competitive nature is really, really fierce right now.
No, I know we're filming this in January, so everyone's like, of course gym memberships are up, right? It's
Exactly.
January, everyone's feeling guilty, they're back to the gym. But I wanted to point out that the data is from a full year, right?
Yeah.
The numbers that we were looking at from 23 and then some preliminary data from 24. So we're not just looking at who's going to the gym after New Year's, right? Because
Yeah.
they feel guilty. And the really interesting takeaway too in the data is that visits for gym members are up. So not just that they have a membership, but actual number of visits per gym
Yeah,
member.
that was interesting too. That we
Right?
saw.
So
Yeah.
people are not just subscribing, they're actually going, which to me points to that shift towards a healthy lifestyle and prioritizing a way of life, not just kind of phoning it in and saying, I bought this membership and that's it.
You have a Peloton?
I do
You
have a
said?
Peloton.
Are you a Peloton?
I like Peloton. I like to run. I like all different things.
How who's your favorite instructor on the Peloton? Do you have one?
Really depends on what kind of class I'm doing. I like Anna Greenberg for yoga.
Okay. So you do other stuff other than just the bike.
Weights, yoga. I did a whole strength for skiers program. It's a multi-week program that I just started last week. Big fan. It's great.
Strength for skiers program.
So they have very specialized
Interesting.
classes too.
I have a Peloton, and I would say at least once a week, one of my workouts will be the Peloton, because it's so easy to
Right.
just
It's
walk
downstairs,
in,
it's
hop
right there.
in, and
Yeah.
boom.
Right.
But I'll just do a cycling class is what I'm doing
Okay.
on there. I've never explored anything other than the cycling classes on there.
That's because you probably have too many other gym memberships. So you don't need to, right?
But what were you doing? Was a lot of leg work on the ski stuff? A lot of
Flexibility,
Flexibility.
mobility, legs, all different depending on which class it is. It's a program, so each day is different.
have you skied since the program?
I have not, but I'm going on Saturday.
All right.
I'll let you know.
I'm dying to know if you
I'm
think
sure I'm
it's
going to be much better.
much better.
Probably. Yeah,
Of
that's
course.
the expectation.
Why not?
1 week of working out and I will be much better.
Is
at
that-
skiing.
How long have you done the program?
This is my second week. So
All
one
right.
full week.
I'll go one full week.
Yeah. Week and a half. It'll be 2 weeks by the time I ski. So
Okay.
I'll let you know.
All right.
But I think that kind of speaks to, right, the specialized nature of working out, that there's all these different targets and somehow you have to make it come together. So I find the solution is great for the Peloton because I can do running, I can do yoga, I can do strength, and I just need one membership. But then on the flip side, you're saying there are all these specialized gyms that still have market share and room to run because people want to have all these different elements and maybe they're willing to pay for different memberships. But everyone's looking for a complete fitness solution. Well, not everyone, but a lot of people.
Yes. We used to have this tenant, World Gym,
Okay.
in Highland, Indiana, and he explained it to me, which was at the time, only 10% of the American population had a gym membership. This is like in the mid-2000s. And all the gym owners were focused, and they called that the conditioned person versus the deconditioned person. That 10% was the conditioned person. They were very focused on that conditioned person. And they went, and all that was happening was they were crushing themselves because that deconditioned person, that conditioned person would join Powerhouse Gym for $99 a month. And then World Gym would come along and do a promotion at $29, and they would go back and forth and just go to the best deal.
Because the gyms weren't differentiated.
And it was small population.
Yeah.
And what happened was Planet Fitness said, this is silly. You guys focus on the conditioned person. I'm going to focus on the deconditioned person. So you have 10% of the whole US. I'll take the other 90.
Right.
And what I'll do is I'll have Bagel Tuesdays and Pizza Fridays.
Stop. They do?
They had. I don't know if they do.
Freeze.
And guess what? We'll get people to join.
Right.
And we'll charge them $9.99. We'll get a ton of people to join. And
They're probably not going to go. So
they broke the mold, though, to your point, you know, Faith, which is they got the deconditioned person feeling comfortable about signing up for a gym membership. Most of the Planet Fitness people that they signed up over the years before that never had any gym membership. Whereas like Powerhouse and World Gym and Gold's Gym, they couldn't get that person off the couch.
Right.
But Planet did.
So they found a new segment. They created a new segment. I
don't think they created a new segment. All I think they did was they were able to get the person, they were able to sell their product, the gym product, when the other person wasn't. And the reason they were able to do that was they won on price and they won on the concept of this making people feel good, because Gold's Gym and how they marketed and promoted, like it was like meatheads, let's go. And so like the 40-year-old soccer mom just like didn't feel great going in and doing it. So she did aerobics on her TV. Planet, they have a no grunt zone. They have, right? They have all these things. And so what they did for the industry, I don't think they created a new segment, but they found a way to get the person off the couch that legacy gym owners couldn't do. And now that they broke that mold, I think this number is going to continue to grow.
So it's exercise for all. Doesn't matter what you like to do, what you look like going in, how fit or conditioned you are or aren't. Everyone needs a gym membership for wherever you are in your life.
Everyone needs to work out.
Okay.
Not everyone needs a gym membership. Everyone needs to work out. Whether I can get the person to run, I can get the marathoner, whether I can get the marathoner to come into the gym when they need to run 18 miles a day on the road in the terrain to get used to that. Well, that I don't know that I can get that person, but that person is still a lead for me. And it's a better lead than Planet had to deal with the person who was eating pizza with M&Ms and Oreos on top, and they got that person to come in.
All right. So it can be done.
That Planet did it. Planet did it. Can we continue to get that person off the couch, and then can we get can they continue to compete with the exercise that doesn't have to be done at the gym? So to me, when you talk about the Peloton and the guy I'm surprised by those remarks, only because the Peloton and the marathoner who's running, because we thought those were going to be the winners coming out of COVID, and the gyms proved that people like the act of going to like my wife has a gym membership, even though my home gym is epic. We're both saying that the trends keep saying more and more people want to be fit and want to be healthy. So I think that's going to continue to grow.
So that's the growth.
At numbers, I don't know. At what numbers, I don't know. But like everyone's growing in this health and wellness and like, saying we need to be fit.
It's true. It's going to be a beautiful thing. I hope that's the case. So I think the big takeaway from all of that is, one, fitness is not a scary word anymore. In fact, it's extremely hot. Our bricks and mortar gyms have really made a remarkable turnaround since COVID, and we think there's more room to grow. You think exponentially more. I think
do.
Some, but that just goes to how we feel about the American population. But I hope you're right. And fitness as a category is going to keep outperforming. And that brings us to just the overall sentiment of the consumer, which seems to be we are buying goods because we have to. We're looking for value. We're buying the basics. We're really kind of being more selective on what we buy, not spending less, but looking for value, and buying services because we want to. That's where the fun is. That's where the spend is coming. That's where the stretch, the lifestyle, the travel, that's what's expanding, because that's where we want to spend any free capital.
Sure. I would add to that, which I would say is, I think people are spending on goods that they don't have to, that they want.
Okay.
They just want to do it they want to think they're getting a value. They want to get a value. So I think people on goods are much more value conscious than they are on services. On services, they're not nearly as focused on making sure they're getting a great deal as they are on just getting what they want. But they're still buying that pair of sneakers they want. They're still buying things at the store they want. They just want a deal and they want a value.
I think that makes sense.
That's how I would couch it.
Yeah. And I think with bricks and mortar retail, so much of the conversation focuses on goods, right? Like online, e-commerce, but so much of our industry is actually focused on services.
Sure.
And it's important to kind of look at both segments when we're talking about the consumer, because it's a huge part of retail real estate.
For sure.
All right. I think that's a wrap. Anything else you want to add before we conclude?
That's it.
All right. To everyone listening, we appreciate you tuning in. That was What's in Store with Carly and Chris. We hope you have a great week, and we will see you again very soon. Take care, everyone. Thanks, Chris.
Thanks.